Sarah, we're going to kick it to you. So last week, Ian and I are in Vegas for a real estate conference. And all of a sudden, Ian and I, well, first of all, we all had to brave the ice apocalypse. My trees just got cut, which is sad. But Ian and I are in Vegas. And all of a sudden, my feed is filled with all these realtors. Rates are at 5.99%. Rates are at 5.5. No, oh, it's amazing. Under 6. And like my feed is just filled with realtors. And I'm like, I usually give it like 2 days before I say anything about rates. Yeah. The next day, I'm like, oh, we're at 6.1. We're at 6.2. We're at 6.4. Holy crap. What happened to all these low under 6% rates? Sarah, the angel of death when it comes to rates. Is that...
I need a t-shirt.
Yeah. Sorry. The executioner of rates. What happened? Why would rates drop down so dramatically and then just spike right back up?
Yeah, sure. So we did have a nice decline, and that's what I was kind of predicting too. So we were on this nice little trajectory of rates slowly decreasing because the inflation reports were coming out. Inflation was being combated. We're seeing it slowly come down as well, and everything was on track. Then comes Friday, and Friday was a jobs report, and it was the BLS jobs report because earlier that previous Wednesday, the ADP jobs report came out, and it was in line. It was what we were expecting. It was about 106,000 job creations. Cool. Friday, the BLS comes out with their own report, and it has 196,000 job creations, which is like blew it out of the water. No one was expecting this number, and it was an insanely high number. And so we kind of
explain that. Explain how is an extremely high number.
So, I mean, we were expecting, like I said, with ADP, that was in line with about 106 job creations. So when you go from 106 expectation to 896, it's like, where did this come from? It just wasn't expected from previous data and data collected from other sources. So if you dive in deeper, which a lot of people don't know what to do, but if you are wanting some nice reading material at night, go to the BLS, which is the Bureau of Labor and Statistics job site. It's fun. You can dive in and see that they actually did adjustments to the job numbers. So they actually had 84,000 job creations, but then they adjusted for population control by 810,000. So there was 84,000 job creations, but then when you adjust for the population control of 810, that's how you got the 896. And so because of that adjustment by the BLS, that is what caused this really inflated number.
Remove the L.
Yeah. And so we actually were going to have unemployment go up, but because of this number, unemployment slightly went down, which isn't, I don't know about you, but if you're looking in the news, if you're talking to friends and family, you're hearing about layoffs. You're not hearing about all these job creations. And
Hold on. In my best Trump voice, it was an adjustment. That was terrible. I didn't even get it. I tried. Really bad. Yeah, I could do my Biden voice. There we go. Sorry.
But actually, what's also really interesting to point out with these numbers is 606 of those jobs are part-time and they're not full-time, which I think is huge. And then if you actually net and compare the netted out numbers, and I thought this was really interesting, there's more full-time jobs last May. So May of 2022, there was more full-time jobs than there are today, meaning that not one full-time job has been created on net over this time span. So that jobs report is very inflated. So it makes it look like we're not combating inflation. It makes people wary that look of it. There might be wage inflation issues, which again would add to inflation, not help decreasing it, which is what the goal is. So over the weekend, there was a lot of international trading and global trading because there's a global yield. So we had the Bank of England. We also have the Regional Bank of Australia, the Reserve Bank of Australia, excuse me. They see this. They don't know like the nitty gritty of the adjustments. So now they're like, oh no, we're going to go off of that. They're not combating inflation. So now we're overshooting. So then that also on Monday made the mortgage-backed securities for us worse. So that caused our interest rates to be even more worse than would have happened with just that jobs report. So, but good news is we had people are starting to see because word is getting out about the adjustments. So that's good. And so people are starting to correct a little bit.
So this rate spike, actually, Ian, let me get your thoughts. Go ahead and expand on any of that. Welcome to join the channel.
I think, as Sarah pointed out, it sounds like there was, I'm not going to say misinformation, but we were talking about it before the channel before we started the live, that the information was not disseminated correctly. And so the adjustments are not indicative of what's actually happening. And that's always worrisome. There's a line, hold on, I wrote this down. Here's his line. Jerome Powell said, a potential pause would be premature. That sounds off to me. So I'm curious to hear more about what's going on with the rates from Sarah.
Yeah. And the good news is that Jerome Powell, when he did speak yesterday, that helped because everyone looks to what the Fed chair says and they react and the market reacts. And so he came out and basically said, we're not going to look at this jobs report. We're just going to look at the data. Now, if we have another positive jobs report, that's something that will cause us to pause. And we might need to have a longer Fed fund increase or a higher Fed fund increase in the future. But right now, we're not going to pay attention to this jobs report. We're looking at the other data, and everything else shows inflation is starting to be tackled, and we're starting to see disinflation, which is good, and that's what the market's liked.
So yeah. Matt in the comments, he says he's probably going to hike it again. So we know that they were on a path to hike at 75 basis points. This time 25 basis points, right? So I think question in the comment is, what do you think they're going to move it to? Or do you think they're going to continue with the lower rate hikes?
I haven't heard any talks about what that number is going to be next time yet. I think they're going to stay on track right now, and then they're going to see what the next number is. I will say that one of the big dates to look out for is May 10th because of the year over year in numbers. May 10th should be a really good date, just like November 10th was, where we should start seeing a larger decrease in mortgage interest rates because of inflation data and inflation numbers.
And just because I thought it was hilarious what Ram said, I want to post it in the private chat here. If you can pull it up, Jeremy.
Okay.
There's a chart for the inflation price just for eggs. Like we just watched the chart for eggs. I thought that was really funny. I put it in the private chat.
Oh yeah, give me a second. I got multi-screens here to move out of. So yeah, so before we get over there, here's what rates did, and I'll show you where this was the day right here. Boom. Thursday, everybody went nuts because the 30-year finally dropped under. But if you look at it today,
for like 3 hours.
Yeah, I mean, it went down from 6.45 down to 6.42. So,
and here's the thing. So you mentioned this earlier. All the realtors, we were all sitting at a convention. One person saw it, and then it just spread like wildfire. What does that do to the consumer trust when they're watching realtors and they're all like, go, buy now, go, rates are down. And then all of a sudden it climbs right back up. What does that do?
I mean, Jeremy, were you going to?
No, I mean, I think this is why, I think it's important that not just realtors, did I get the right one? No, I did it wrong again. I think it's important for not just realtors, but to everyone when news comes out, to take a pause, think about it, and look at it before everybody jumps to one side. Like, oh, here's what this, you know what I'm saying? And so this is just a prime example, and I don't blame realtors because I saw it and I was like, oh, I got to do this, but I had a million things on my mind and I decided to wait. Luckily I waited, but I think this just goes to show how volatile the market is and what we're going to look and see this year. Thanks for watching this short of the Real Amigos podcast. For more live streams, hit here. For more clips, hit here. We'll catch you on the next one.